GM everybody, it's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help you get prepared for this week's trading and also give you some insights into how I'm reading this tape and how I'm approaching this market. So without further ado, let's get it kicked off here with the S&P 500. And on the daily time frame, we actually finally have closed in an uptrend. Okay, so I always say all the time, not every uptrend is created equal. You have to understand the macro trend is still down. Okay, so we're still below a declining 50, a declining 200-day moving average, and it's been tough trading just getting back into this uptrend. If you guys have been watching the playbook, we've been in no trend, flipping and flopping in no trend for quite some time. We've been in no trend. So just to kind of break that down, on the 13th, we did have this reversal candle where we did close inside the cloud in no trend. The next Monday we opened and we closed below the cloud and no trend, and then we flipped back again, closed above the cloud, inside the cloud and no trend, but no uptrend because we need to get above a previous day's high. Gap tire, but we sold off. It wasn't the type of uptrend you want to see during any type of uptrend. But technically, we did close above the previous day's high, but I just didn't really want to classify this as uptrend yet because of the price action. So still no trend, no trend, no trend. Finally, Friday looked like we maybe wanted to roll back over again, got saved by the 10 SMA, and rallied on OPEX. So keep in mind that this Friday's candle was OPEX, and we didn't quite make it above the weekly high, which was on the 18th. So didn't close above this candle's high, which I would have loved to see. I think that would have set up very nicely for potential test of the upper band of this cloud, which is the 50 SMA. But nonetheless, we're in an uptrend. So this week we're going to be looking to allocate new long market exposure into what's leading. But like I said, be very cautious because the macro trend is still down. I do want to highlight a couple things on the higher time frame. So the weekly time frame, putting in these new lows, but we're still heavily deviated from this declining 10-week moving average. Wouldn't be surprised if we came up and tagged that, especially since if we pull up the 200-week moving average, which if we go back is a very important moving average, has pretty much been support since we got above it back in early 2011, late 2010. That's been a very important moving average for this market to hold and regain. You can see we had this flash dip below on COVID and quickly recovered, came back into this 200-week moving average again just recently. We've flirted with this 1, 2, 3. This is the fourth week in a row now. We're basically touching that 200-week moving average. So obviously an area of interest, right? So very, very important level that we need to hold for SPY, I would say, would be this week's lows. If we close below this past week's low, which was 357.28, yeah, that would put us as a closing below that 200-week moving average and also be price weakness to the downside. So keep a very close eye pretty much on this 360 level, okay, for SPY. You can just write that down. Roughly 360 for SPY, extremely important. If we can hold above it, hey, the lows might be in for this year. All right, I'm not willing to say that the bottom's in and the bear market's done with, but we're already in October. We could see multi-week rally into year end, especially if we get any sort of relief with inflation numbers, and if earnings are better than expected, along with the tail end of this quote unquote Santa Claus rally. You got to stay open-minded to that, okay? So be open-minded for an end-of-year rally if we hold these 360 levels on SPY, okay? So you got to stay open-minded for to be a successful trader. You just have to be open-minded and taking calculated risks and knowing where we are in the trend and where your stops are. So we are in an uptrend. Like I said, we're going to be looking to allocate new risk exposure this week from the trading playbook. Let's take a look at the NASDAQ. NASDAQ tech has been lagging, but when we do have the up days, percentage-wise, it is playing catch-up. So definitely something that we're going to be monitoring. Dow Jones has been leading the way this entire time, pretty much closed at that 50-day moving average. A big part of What's helping the Dow Jones is banks. Banks are performing relatively well, and also energy. So energy is actually outperforming pretty much everything, and we'll likely be taking a look at getting back into energy if we can sustain this uptrend in the market. Energy looks great. Yeah, we're coming into a gap fill area, so we could slow down in here. We've come from 68 to 86. That's a big run. Be open to some sort of consolidation before move higher. This does look like it wants to move higher, so keep a close eye on energy as well as we're moving through this market. Lastly, you guys know we got to talk about crypto. Bitcoin has done almost nothing since this summer. Been trading sideways. I don't love this trade setup. We have no follow through to the upside. We have no follow through to the downside. This is probably going to be an explosive move like this or like this. I know those are to the downside, like this previous move to the downside back here. When we get these long consolidation ranges, usually the move is explosive up or down. Odds are favoring lower. Okay, so just keep that in the back of your mind. Okay, Bitcoin, Ethereum can go lower if we want to, but like I said, I think if your time horizon is any more than 3 years, these are fine levels to accumulate. I think we're going to be looking back in 3 to 5 years saying, wow, Bitcoin was 19,000. So it's kind of my take on crypto. It's a very volatile asset, and it's currently very highly correlated with the market. So be open to large volatility moves in crypto. Just to wrap up, again, this week we are in an uptrend. It's not a extremely thrusting, bullish, strong moving trend. Nonetheless, it is an uptrend. So we will be looking to add long market exposure this week. See you guys on the open.